What's your sense? Because the belief, at least until this really broke out, was that we seem to be in the midst of, or we seem to have contained this, because even if there would be higher cases, the vaccination would take care of the fears around coronavirus, and it is the fear and the sentiment that would impact the markets and flows a lot more. It seems that for the near term, the outbreak of cases is overtaking the sentiment around vaccination. How do you think that impacts the market, both sentiment wise and flows wise, in the near term?
I think, Neeraj, it's a one question that everybody is grappling with, and there is no denial that second wave is hitting us. The situations are reasonably bad across the board, and it will have an impact. So, pre this second wave, the markets were kind of building an hypothesis that recovery will happen. Recovery will happen rather quickly. March quarter earnings will suggest that March quarter was going very well, but as we got into April and slightly bad situation on the corona front, I think you will start seeing partial lockdowns happening, fear psychosis playing out, and all those things will have impact on smooth functioning of the business, which was very essential to the recovery of the businesses across the board. So to that extent, I think we will see somewhat impact on the recovery pace of the economy, and whether that will last 1 quarter, 2 quarter, that will only depend on how the cases sort of escalate and how the situation comes under control. But for sure, I think Q1 numbers would get sort of compromised. Demand will sort of slow down. Because supply chain issues again will come back to the fore. They may not be exactly same or to that proportion as we saw in the first lockdown, because that time we did not have knowledge about how things will get controlled, what will happen. Everything was first time. This time around, I think everybody knows, businesses, government, hospitals, how to tackle the situation. So, proportion of the damage would not be anywhere close to what was last time, but it will definitely taper off the recovery, what we were expecting, in the economy. And we will have to that extent, see markets can correct, because markets are also kind of in some sense pricing in a good recovery scenario. And to that extent, you might see market give away those gains. Can we go to, let's say, 5-7% down from here also? Can it go to 13,500? Quite possible. And but that does not mean that the economy is permanently damaged, or the recovery chances are kind of very bleak or lesser. I think recovery will happen, but we will have a sort of pause, or we will have some sort of short-term damage, which we'll have to live with from a Q1 to Q2 perspective. And to that extent, flows will slow down. People who are wanting to invest money might kind of become a little bit careful and wait for more correction. So to that extent, that whole psychology of how it plays out will be there, and that uncertain scenario might remain there for a Q1. And mind you, this will continue to remain there till that, even despite good quarterly earnings of Q4, because markets are always forward looking. So markets will overlook whatever good numbers in Q4 companies are reporting.